Nifty is up about 90 points, 100 points now almost, 95 points.
We followed it up with a near 200-point gain on the Nifty.
Has been steady for the Nifty, up 150 points.
It was a gap-up opening of about 80 points, but from there, we added on another 100-odd points. Just in the last, maybe second half of the trading session, we've come off a tad bit.
You're still looking at a solid 100-point move on the Nifty. Sensex up about 430-odd points. Banks actually saw some of the gains getting trimmed off. There was profit taking in the metals part of the market.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track around 6 hours of the day's trading action and just 5 top headlines. I'm Nigel D'Souza. Here are the headlines for the day. No Monday blues for D Street as the bulls build on Friday's pullback. The Sensex gains over 400 points. The Nifty reclaimed 17,700 despite coming off intraday highs. PSU stocks hold center stage while mid-caps do well. Bank stocks underperform. Vedanta chairman Anil Agarwal dismisses concerns over debt, says the group's position is comfortable, also urges the government to sell its residual stake in Hindustan Zinc, saying the promise was made 20 years ago. Adani Group stocks continue their gains for the 5th session in a row. 8 of the 10 group stocks end in the green. The group adds market capitalization to the tune of around 30,000 crores today. Prominent stakeholder LIC tells CNBC-TV18 that they are more confident about the businesses following their meeting with the management. Britannia slips as analysts flag tightening margins caused by wheat and milk inflation. Nika also stumbles on weak commentary as Macquarie sees a 23% downside in the stock. The brokerage also says that the company's margins could strain its push into smaller towns. And in stocks making news, Mahanagar Gas jumps 8% after analysts share its acquisition of Unison Enviro. Meanwhile, Power Grid gains as it becomes the top bidder for 2 projects in Chhattisgarh. Well, plenty lined up on the show, but let's run you through the lineup. Well, we'll bring you the market opinion coming in from Rahul Chadda of Mirae Asset Global Investments. And the big corporate voice on the show is Vedanta Resources Chairman, Mr. Anil Agarwal. Well, before we get to that, here's a look at the market action. The Sensex gained close to around 400 points in trade. The Nifty was up more than 100 points as the Wall Street began the week on a positive note. The Nifty managed to regain the 17,700-odd mark despite coming off the intraday highs. The bank stocks, well, they underperformed the blue chips today. Surbhi is standing by to run us through a quick market wrap. Surbhi?
Well, the bulls are going into the holy holiday on a pretty buoyant green note, you can say that. And that's because after what was a strong Friday, we got a good follow through on Monday. Now, the nitpickers will say that the market shaved off some of the gain by the end of the trading day. But I'll tell you why the bulls won't be too disappointed with that. Because number one, this was a very wide move. It was cutting across sectoral lines. And it was a move which saw mid-caps participating as well. It wasn't just a few group of large caps or a clutch of large cap stocks, blue chip stocks that was taking the market higher. The Nifty, by the way, has crossed the 20 DMA today. It crossed the 200 DMA on Friday itself, and today it's taken out the 20 DMA. So continues that upward trajectory. Let's talk about the constituents. PSUs are a big theme in this market. This government capex theme is finding steady takers. And today, you had so much action in stocks like an ONGC, an Oil India, Power Grid, NTPC. So this was a very solid theme. IT and autos saw some buying. That reflects in if I talk about the Nifty gainers list. So you had Tata Motors with good numbers from UK, JLR sales coming through. You had an Infosys and a TCS. You had Reliance contributing. You had an HDFC Bank contributing. So very diverse in terms of the up move, in terms of the leadership of the rally. Metals saw some profit taking after the big run up. That was evident in stocks like Hindalco, TCS, etc. And then we had, of course, the Adani Group, which saw some follow-on buying, though the gains cooled off on stocks like Adani Ports or Adani Enterprises. Must mention Mahanagar Gas, by the way. They've done their first ever acquisition and the stock was flying away, one of the best mid-cap stories in today's market action. Well, the litmus test for this market, of course, is going to be when it comes back from the holy holiday and actually gets in towards the weekend. Friday, we get the non-farm payrolls data from the US. Now, it is that report that triggered the move in the 10-year yield a month back. We need to see if the numbers are going to be a little more sanguine this time and whether yields will remain in check. But until then, the bulls can get into the holy holiday on an optimistic note.
Indeed, Surbhi. Thanks so much for that. Well, market opinion, Rahul Chadda of Asset Global Investment says that he expects more rate cuts from the US Fed by the end of the year. Also adds that he is positive on new age companies. Let's hear him out.
expecting some interest rates cuts from Fed towards the end of the year. I think that's got a push back with this sticky, lingering inflation in the US. And that would be kind of a headwinds for markets globally. Dollar may continue to be a bit strong. In India also, we are seeing signs of slowdown. But look, any medium-term investors should take this opportunity of this time correction, prime correction, to add to equities exposure. So from a medium-term perspective, this is a good time to buy the names we like. Near-term is going to be choppy. Ability to or liquidity to add for next 6-9 months, or at least that kind of an attitude that it doesn't matter that these names may go down in 6 months, but eventually over 12-18 months they'll do well. What we have in our funds is small exposure. We've got about 1 to 1.5% exposure across these names, and we're happy to hold them from a medium-term perspective. Near-term, like as we discussed, as things are going to be slow, market is going to react to that. Competitive intensity is going to increase. But if we see what these companies have done over the last 2-3 years, despite strong competition, they've gained kind of a significant foothold in their respective categories. They've got a good connect with the consumer, and longer term, I think that's what matters. So one's got to look beyond this near-term noise, and from a 3-year perspective, I think these are good accumulation points here, or 10-20% are good accumulation points for the likes of Zomato, Nika, etc.
Okay, all right. Time to move on then, and let's get to the second headline now. We spoke to Anil Agarwal, the founder and chairman of mining company Vedanta. He's extremely confident about the company's financial health. Speaking exclusively to CNBC-TV18, Agarwal said that $30 billion in revenue and $9 billion in profits. Vedanta has enough internal accruals to repay debt and even raise fresh funds. Let's hear out what he had to tell us.
Very comfortable. Every penny has been made. Yeah. So there is no question. We have, number one, we have enough internal accrual to take care of all our debt payment. On the parallel, we have enough resources to raise debt, which is the regular business of ours, to make sure that each payment is made on time. Last 15 years, never this kind of raise, never been company was such a good shape.
Yeah, right.
And never been this question been asked.
Right. Mr. Agarwal, your Vedanta resources, normally all the payments, if I look at the previous quarters, you have made it in advance and by a good margin. And this time around, there are a couple of payments that are coming up, say, in the next couple of months, which they're still outstanding. So that's why the street is a little bit jittery on Vedanta resources. But you're telling us that you're confident you're going to be making those payments?
More than confident. More than confident. As far as the bond is concerned, sometimes there is an opportunity people to make money. People to make money, where you will get this kind of yield? A common man should buy this bond because this is a 50% gain. Because this is the greatest opportunity to make money on Vedanta bond. I'm saying why government has agreed that we will sell 100% share 20 years back. How much you hold us our leg not to run. They have to take a decision to disinvest this 29%.
Yes.
If there is a clear-cut agreement that they will be divesting to us with a particular formula, and government can get probably 50,000 crore, 40,000 crore.
Well, Mr. Agarwal sounding as confident as ever on the current Vedanta resources debt payment that is due. But let's move on then. The third headline today, Adani Group stocks, well, they continued gains for the fifth straight session. 8 of the 10 stocks except ACC and Ambuja ended in the green. The group also added 30,000 crores of market capitalization in this session. It has added market cap worth over 2 lakh crore rupees in last 5 sessions. Seema Modi spoke to Rajiv Jain. Well, LIC chairperson Mr. Kumar as well is upbeat about Adani Group's business prospects. He also said that he has met the top management at Adani. Let's hear him out.
I can only confirm that the conversation has happened with the department, but there's nothing I can state as of now on the outcome of that meeting. But yes, we have had the meeting.
Are you more confident than you were about a month ago on the business prospects, not the stock price, the business prospects?
I believe so. We are quite happy about the meeting.
Well, moving on to the insurance space, and the centre is working on bringing clarity around the taxation on long-term savings plans. Sources say that the government is currently discussing a possible increase in threshold for taxation life insurance policies. Yash Jain, he's been on top of that. He's joining us to fill us in with more on that. Yash?
Well, since the time the budget announcement was made on taxing long-term savings policies, there were several questions. Initially, they were on the model of this taxation itself, but one question which persisted was that who gets to choose what policy gets taxed once that 5 lakh limit is breached. What we've been given to understand from our sources is that that very question is still, there very much existent as far as the policy makers are concerned. The government is seeking views in terms of making it clear and giving additional clarity in terms of who gets to choose which policy gets taxed in case the 5 lakh limit is breached. Not just that, we've also been given to understand that the government is also considering views when it comes to raising that threshold of 5 lakh rupees when it comes to taxation on long-term savings policies. Of course, there were several representations which are made by the industry itself, the industry bodies, to the finance minister and the government, essentially seeking a higher threshold when it comes to taxing life insurance policies. The government is at this point of time considering all those views, whether that limit has to be 7 lakh or even 10 lakhs are the 2 points which are under consideration. Of course, no final decision has been made so far, but it will be interesting to see the course of events as far as these two important changes are concerned.
Well, moving to more insurance news, GIC-RE, the CMD, believes that good growth trend to continue in Q4. He adds that more companies are contemplating agricultural insurance because it's a big ticket item. Take a look.
Q3 has been very good for us. Our ratios have been very, very satisfying to us as management. Q4, that trend will continue. With the amount of push the government has given in the budget for infrastructure, there is going to be a big plus for us in the sector, especially reinsurance, because these big ticket infrastructure projects need reinsurance. It is motor and health which form the bulk of the direct insurance. Unfortunately, they do not require much of reinsurance. So the next to become fire and agri. Now both of these will see a change in the coming 23-24 because in the property segment, as I said earlier, because of the huge impetus being given by the budget for infrastructure, we will see a growth there. For agriculture also, if that new scheme comes in, and now that the companies are also, more and more companies are contemplating writing agriculture, because that is big ticket, that will again see a good growth.
Well, let's turn our attention to the diagnostic space, and we got some opinion earlier today. Ravinder Kumar of Lupin Diagnostic says that prices have been in control for the past 6 to around 8 months, while Prakash Agarwal of Axis Capital says that gross margins have been impacted by rising raw material prices.
Things has improved pretty well in a couple of months, what we are seeing right now, and there are different segment of player which are in retail as well as on digital side. And we are typically in the retail segment where we are doing pretty well, and the price is quite under control for last 6 to 8 months. And we are seeing it in right swings to move on. We have now more than 400 plus outlets which are operating all across West and East India. And we recently launched our South India operation from Hyderabad, and we are on track in terms of driving the network reach in tier 2 and tier 3 cities market. But at a business level, we are right now in more than 125 plus cities. We are driving footfalls.
While the discounts remain very high, I mean, they range at 40 to 75% from the rack rates which the large diagnostic companies are offering. At the margin, the discounts are coming down, but that is only at the margin. So even after the discounts coming down, the prices are still 40 to 75% lower. We are a little negative on the margin side. We believe that the costs have gone up. Cost of doing business has gone up. A. B. All the companies are expanding. So there is a threshold cost of setting up as well as bringing it to break even. So that cost is there. Plus raw material prices also have increased.
Well, time to slip into a short break, but you stay with us. We'll be back in a jiffy with the other headlines that we're tracking for you. Welcome back. You're still with us on Markets Today. Well, let's run you through the remainder of the headlines that we're tracking for you, which brings us to the fourth headline today. Britannia slipped close on 2% today as analysts flagged tightening margins caused by wheat and milk inflation. Mangalam Malu is with us to run us through details of a couple of those reports. Mangalam?
Well, for CLSA, they've downgraded Britannia. They already had an underperform rating on the stock, but they've gone ahead and downgraded it to sell now. The reason why they've done that is because they believe that there is a risk of margins missing consensus estimates. That's on account of high inflation in both wheat as well as milk. But the point to be noted is that wheat actually has corrected about 30% from the highs, while milk stays at near record high levels. So the impact of that on the margins is something that we will have to monitor. Consensus estimates margins at around 17.5% all of next year. CLSA believes that there is a downside risk to that, as a result of which they've also downgraded their EPS estimates by about 1 to 11%. What they're also uncomfortable with right now is the way the stock has moved over the last 1 year or so. A 30% up move means that there is limited room for an upside, as a result of which the target price that they have on the stock is 4,060 odd rupees.
Well, Mangalam, we can't let you go at that, so stay with us. Yet another stock that was down was Nika. Analysts feared that Nika's core and beauty business margins could come under pressure as the company looks to expand to smaller towns. Tell us more about that, Mangalam.
Well, that's an interesting one coming in on Nika as well. Macquarie has initiated coverage with an underperform rating, and the target that they have is about 115. Remember, at the peak, the stock was over 400 rupees adjusted for the bonus, etc. So after a big correction, they've, they believe that there is further room for downside. Why is that? Because two big businesses of Nika, the core business, the beauty business, is where they're, worried about the margins out there. They say that there is a risk to beauty segment's margins as the company expands to smaller towns, expands offline presence, and at the same time, the competition threat from other large players looms as well. The other revenue driver of the company was supposed to be the fashion business, where they believe that their experience in analyzing physical retail companies makes them cautious on Nika's, own brand focus and curation-led positioning in fashion, as a result of which they believe that the business prospects look relatively cautious, and limited operating history of the company with the need for growth investments may bring some more caution to their EPS estimates, and that is what explains their underperform rating on the stock.
Got that, Mangalam. Well, moving to the fifth headline today, and stocks in focus. Mahanagar Gas jumped close to 8% after analysts shared its acquisition of Unison Enviro. Sonal Bhutra joins us to fill us in with more details, and more importantly, what are brokerages making of this small acquisition? Sonal?
Thank you so much for that. Well, it is a big step because it's the first inorganic step which the company has taken, and it takes away from the issues regarding volume growth for the company as well. To give you the news, the company has gone ahead and acquired Unison Enviro for 531 crore rupees. It is an all-cash deal, and this is the city gas arm of Ashoka Bilcon, the other listed company as well. The company says this is done in order to expand their inorganic portfolio and get access to more geographical areas as well. Now, this particular company which they have acquired has access to 3 geographical areas comprising of Ratnagiri, Chitradurga, Latur, Osmanabad. So basically it is over Maharashtra and Karnataka. In terms of financials, for FY22, Unison's revenues were 89.5 crore rupees. They did make a loss of 25 crore rupees, but over years those losses have been contracting for the company. ICICI Securities says that these areas provide some exposure to both industrial and commercial segment, and that's the reason each of them could contribute around 0.2 to 0.25 MMSCMD individually to the volume portfolio. And by FY28, with further expansion and investment that Mahanagar Gas will put in here, this can add 1 MMSCMD to Mahanagar's volumes, which were at 3.5 MMSCMD in FY22 itself. Citi has a buy rating on the stock with a target price of 1,030 rupees per share. They do call it an expensive acquisition, 6.4 times trailing price to book, but they are positive on this one. It could be a good use of cash by improving MGL's growth outlook. It is still at an early stage in terms of growth, but they can scale it up further, and it also takes away from the perception around MGL that they are lacking growth aggression. So this answers that, plus additional volumes that will flow through will be positive for the company.
Okay, well, before we wind down then, Power Grid and Ashoka Bilcon were both surging in trade today. Vivek, what's caused that big move on both these two stocks?
Well, some important news flow coming in as far as Ashoka Bilcon is concerned. Number one, the company actually received the notification of award as far as development of DISCOM infrastructure is concerned, and this is from the South Bihar DISCOM. The total contract value for this particular contract is a little over 260 crore. More importantly, some news flow coming in as far as the stake sale monetization is concerned. The company sold its entire stake that it had in Unison Enviro Private Limited to Mahanagar Gas Limited for 531 crore. Now, what is this company? Uniso Environ is actually a subsidiary company of Ashoka Bilcon. In this particular company, Ashoka Bilcon holds a 51% stake, while the remaining 49% stake is actually held by an arm of Morgan Stanley Infrastructure India. The other one to keep an eye out for, of course, is Power Grid. Now, what's actually happened is the company has received the letter of intent for 2 projects on March 2nd. These particular projects are expected to be executed in the BOOT basis, that is the build, own, operate, as well as transfer basis. Both Ashoka Bilcon and Power Grid were surging in today's trading session.
Okay, thanks a lot for that, Vivek. And on that note, though, we'll have to wrap up with this edition of Markets Today. Thanks so much for watching.
Powered by Federal Bank, your perfect banking partner.